We are now looking at a New Zealand dollar weekly chart, and we are going to look for some position trades. Now I know this is all after the fact. However, you will see in some of the live trading examples that I've had the chance to put together, and also you can see through some of the simulated scenarios and through heavy study of price patterns on the shorter time frames, we can we can make very good entries when we see these trades setting up, because the primary challenge is and what we get most of from people is, well, that's easy to say after the fact. While I will say that understanding the technicals is one thing, but understanding and actually being a trader is another, because trading is in you. It lives in you, and it grows in you simply from gaining and acquiring knowledge of the markets, and more specifically the instrument that you are trading. Now let's have a look here. We have a pennant forming over the period of a few years, and then we have this this is a weekly chart, so there's a lot of time in here. This is obviously, this is the daily chart is 5 times larger than this, and continuing to break it down even further, we have a pennant formation within a pennant. Then we even have this small consolidation here, and then a breakout, and then another breakout, and then another breakout, and then a big breakout. You see how long this consolidation is? Now look how large the breakout is. And then we have this pennant high becomes a level of support for a retest after the unwind out of the pennant. Price rallies up, another position trade here, tweezer bottoms. Okay, you can take a trade here. This is why you will take profit early and then leave some in to carry forward, because this may have stopped you out. But even if this stopped you out, it still lends to a whole new position trade. We're only at 6,400. We've got to get all the way up to 7,400. Note how price moves. This would be very clear on a daily chart. Support becomes resistance. Okay, Chris, enough support resistance already. We understand. If you do understand this, then you should be profitable. My, oh my, oh my. A nice bounce here. How long is this candle? It is 60.63 to 63.73, 300 pip bounce in 1 week off of these highs. What this tells you is that when you see a real nice aggressive run like this, 1, 2, 3, 4, 5 down weeks in a row, approaching a key level, then you should look for a bounce. Now it drifts through by some pips, which is normal. It does that on all time frames. Okay, and then it bounces 300 pips, and it might even come back, but still you caught the bounce. You would have been a trade here for over a week, even if you just took the 300 pips, because look where it's bouncing now. All right, Geez, look where it's bouncing now. 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 My goodness. Okay, now we're approaching the highs, and the traders may start to get hesitant because these are multi-year highs, right? These are multi-year highs, and so there may be some hesitation to move above here, and there is some hesitation. Now we move above. Look where it's bouncing now. You see how the market clearly establishes its levels of resistance and support. I'm going to get that out of there. So where are we at now? We're at a high of 74.47, and let's have a look at something here. When we trade below 7,200 and break this trend line, it's going south. We would have to look at the smaller time frames to see what happened here, if there was a reversal in order, or if there was a very clear technical indication that we were reversing here. But a break of this 7,200 and this trend line would be very important. We traded below 7,200 for 3 weeks, and then it made a rally for 3 weeks and then moved below, forming a bit of a head and shoulders formation here. And let's go back on this one to a pattern that we've seen. Let's make it big so you can see it. Okay. You see this low right here? This here's our high. It's not letting me grab it. This high to this low. Now we're looking at a second attempt. Price moves up to 79%. Remember, each of these candlesticks is 1 week of price action. This is quite bearish. Traders continue to take it up. They move above 7,200 level. Now this one's bullish. This one's undecided. This is neutral. We're bouncing at the 79% retracement. Then we fall. On a daily chart, you would have a trend line here. And we break through the trend line. We consolidate here again between 70 and 72, 200 pip consolidation. And you know how to trade those. Then we break below 70, the next key level. We go to the 162% extension. And let's bring that back in now to make sense of it. Okay. Another position trade here. Real nice. If you're looking at your reversal formations, may have missed something here. Let's have a look. Here it is here. Going back in time. Price here being capped by the 50% retracement. And then we come up to the 62, which is also 7,200, these highs. And then it comes down to the base level of support here. This is why we take profit before these key levels. Bounces up, winds up into a pennant formation. This would have been a pennant on a smaller time frame. A nasty pennant. Then it breaks out of the pennant. Look how much it moves. Goes to the low. I also want you to notice this here. You see how price, when it made the effort to get below this key level here at 70, sorry, at 67, it just consolidated under there for 2.5 weeks. And now the New Zealand dollar is making lows below this key level here at 60 cents. And this is where we are now. 2009. Just kidding. So hopefully you found that interesting. I just want to check one more Fibonacci here from this high to this low. Okay, very interesting. And I'm sorry I missed this. I should be walking through this properly. But you see this high? Price made a swing down and then another swing down to this low. But from this high to this low, the retracement was 38% and is now moving lower. The next target is right here at 56.60. Down here at these lows and the 127% extension. Let's just check. I just want to check one more thing while I'm here. Okay, let's just spread this out here. You see the swing right here, the swing high, the blue line. Price price falls from this blue line. Let's get rid of this one. This swing down, price falls. It retraces 62%, 50-week moving average, and boom, it falls to the 127%, then down to the lows that we noted, and then retraces. Now it has retraced 38%. Has retraced 38%. It is now moving down as the US dollar is rallying. And also, there's a lot of this whole scenario, by the way, there's a lot of this one right here, this move from 70 to 60. The PM of New Zealand was really pretty much jawboning his currency down because exports were really low for a while, and he was trying to stimulate some exports by getting the currency down. And it was particularly there was a strong unwind in yen New Zealand dollar carry trades. So there's a lot of buying back of yens and exodus of the New Zealand dollar in this scenario. And that's what happened. And then it retraced and has since moved down the last few weeks again. But a lot of it is the Prime Minister. And the other central banks don't seem to concern themselves too much with the Prime Minister of New Zealand because it's not a big country and it's not really going to affect their economies that much if they talk down their own currency to a degree for their own good, right? And so that's what's happened here. And although we pretty much just focus on the technicals for the majority of this course, you can it's important to watch the fundamentals as well, as they are the drivers of these technical moves.